more about all of those market forces with Stan Shamu from IG in Melbourne. Good morning to you, Stan. It's a Friday morning, and we're watching the US dollar. Again, it's that taper talk. We have Citi, we have Barclays coming out and saying, look, tapering could happen sooner rather than later.
Yeah, morning Nadine. Absolutely. It seems like this US dollar is back in play. We continue to see traders square off or pare back on their shorts on the US dollar, and as a result, the dollar index is actually back above 80 at the moment, which is a fairly bullish short-term move for the greenback. I think at the last price I checked it was about 80.26, so that data from overnight as well, that's the Chicago PMI, and the unemployment claims really helped it get back its footing and extend those gains we saw from the FOMC meeting. So at the moment it does look like a bit of a rally in the US dollar, or rather a relief rally in the US dollar is on the cards, and we have seen already all the major risk currencies start to lose ground against the US dollar, including the euro, the pound, and of course the Aussie dollar as well. So at the moment, I think looking ahead, it does seem like tapering expectations have slightly risen, or the probability of tapering by the end of the year has slightly risen, with December being the main talking point. But still, I mean, we only have two jobs numbers, or major jobs numbers, to look out for before then, which implies that there have to be pretty big or blockbuster reports for tapering to be warranted by the Fed. Of course, another talking point was that the recent shutdown didn't quite have as big an impact as the market was expecting from a Fed perspective. So that really did dampen those expectations that tapering will be pushed forward to March next year. But we really have to look closely at what the upcoming Fed members will have to say about this. Tonight we've got Bullard, we've got Kosciuszko, and we've got Lacka as well set to speak, and their comments will be something to watch closely, and as well will give a good indication of exactly where the Fed is at the moment and exactly what they think about the market. We've already heard from Evans in the past saying he's looking for a 200,000 print on the non-farm payrolls before even considering tapering. So it's still a long shot, but of course just that slight reversal in the probability for tapering by the end of this year has been enough to see the US dollar push higher in the near term.
Well, let's talk Australian dollar then. In focus today, ahead of the China data, we are expecting to see a slight improvement on the reads coming from both the official read and the flash read. What is a miss? Is a miss likely? What would that do to the Australian dollar?
Yeah, I think the China PMI has been the second most important event for the Australian dollar this week, and we've already seen it lose a bit of ground, mainly due to US dollar strength. Now, this China PMI number is expected at 51.2, and that's around midday today. And of course, a miss seems like it will be something that will simply give traders another reason to just sell this Aussie dollar lower. Currently, we're hanging around that 94.5 level, and of course, we had a pretty swift appreciation in the Aussie dollar over the past few weeks, and this seems like it's reversing pretty quickly. We'll probably eye a retest of that bottom end of the range between 93 and 95 should the China PMI number miss expectations. So that 93 level will be something to look out for a potential test. But apart from this PMI number, I think out of China, there will still be a lot of focus on liquidity. And of course, yesterday we saw the PBOC inject 16 billion won into the system, and that really did have a good impact on the interbank rates dropping below 5%. So that's something that will continue to be in focus in the short term for China. We do know that these interbank rates tend to affect markets quite a bit, and yesterday was a bit of a concern because Chinese equity markets didn't actually get the kicker that we would have expected from that PBOC injection. So that's something to look out for as well today.
Okay. Also looking out for influences on the local market, we do have Macquarie Group reporting. What are we expecting really to come from that?
Yeah, so far I think the market's pointing a little bit higher, just mildly up 0.2%, so there's nothing much in it, and that's just mainly as a result of US futures having dropped quite significantly heading into the close of yesterday's session. So that's just a bit of an improvement from in US futures from that time. So we're not really looking for any big performers at the open to really drive us higher. But of course, Macquarie will be in focus. They've got their first half results today. We've already heard guidance not too long ago. That was back in May, where they did say that they expect first half earnings to be roughly in line with the second half of FY13. So that implies a figure of around 490 million. But the market's looking for something slightly higher than that, as they expect, or they feel that Macquarie has been extremely conservative. So the market's expecting about 505 million from Macquarie. That's from a profit perspective. And at the same time, the fact that they've given very conservative guidance really limits the downside. So there's a little bit of upside risk to the Macquarie result. And of course, the recent improvement in market conditions will certainly be something to look out for as well, from a positive outlook and of course commentary perspective. We do expect Macquarie to be something to see FY14 guidance start to rise as well. So I think from an FY14 perspective, the market's now looking at $1 billion plus from an earnings side of things. So that implies a very strong second half 14 for Macquarie. There will also be a lot of talk about their excess capital and what they plan to do with it. We already know that they've raised their payout ratio from a dividend perspective. So there will be talk around whether or not they'll look to raise this again just to compete with these big banks. But chances are they'll want to use some of this capital to invest in European asset managers, or potentially some leasing, some sort of leasing out of Europe as well. So they've been eyeing these for a while. They've missed out on a few bids, so chances are they'll continue to pursue it from that perspective as well. So there's certainly a lot to look out for from Macquarie today. But this improvement in market conditions benefits Macquarie Capital. It benefits equities as well. So from a fund perspective, this is definitely positive, and could see a pickup in business and deals for Macquarie. So I think there's a bit of scope to see the high from this week broken, which was 52.26, and could see this stock trade high in the short term.
Okay, we'll be watching that one with interest. Dan, thank you so much for joining us. Appreciate it.
Cheers, Nadine.